So Vivek, thanks very much for being here.
Thanks for having me.
It's a pleasure. You are the CEO and co-founder of Clover Health. You guys manage Medicare Advantage plans for senior citizens in the US. You're in a government business, essentially, where the US pays you all to help manage these plans. When we think about, some of the success you guys recently had, you raised, I believe, $130 million in around, put you guys around a $1.2 billion valuation from some serious tech backers. Yet you're in a business that when we talk to VCs and things like that, a lot of people say they want to stay away from, government reimbursement, older people instead of that beautiful young consumer segment, highly regulated industry. Was it difficult to go out when you need to pitch investors who maybe aren't familiar with the type of business that you guys are in, or the type of returns you all want to operate? Is that hard to go out there and raise money? Obviously, you had a lot of success doing it, but tell me what the process is like going out and talking to people and trying to convince them to get into this space.
Sure. So I prior to Clover was in kind of more of the traditional healthcare space. Built an outpatient services company and a hospital company, then got involved in the oncology space with Flatiron Health, and raising capital for Clover was one of the most fascinating and I think difficult experiences I've ever been through. So we started trying to raise outside capital in the middle of 2014. And so my capital raising kind of pattern recognition prior to that was wearing a suit and presenting investors in New York City area historical financials and positive EBITDA and cash flow and raising equity off of that or debt off of that. And taking that approach in the middle of 2014 where we were trying to demonstrate kind of all the merits of Medicare Advantage, being privatized Medicare, regulations having been stable for the last 6 years, but having started over 20 years ago. Talked about how it's a real asset that we're creating, hard to get licensed, really high barrier to entry, and it was really an impossible conversation to have.
Did people just not understand what you were trying to do, or is it more, hey, there's a lot of other things going on in tech that don't present some of the hurdles that you guys have? What was the reaction like when you were going in there and meeting with these folks?
It was, so the first meeting ends up turning into, what is Medicare? And so we spend the first hour talking about Medicare. Then there's
Let's just do it.
Yeah.
Does everybody know what Medicare is? I want a couple non-embarrassed people to raise your hands if you couldn't roughly explain the Medicare program to me in 30 seconds. Anybody?
That's great.
Okay, good. Thank you. We like this audience. All right,
great.
Sorry to interrupt you. Go on.
So I would save an hour if I was pitching people in this audience. And then the second meeting is really talking about privatized Medicare, which some may or may not know, but was started in 1997 as Medicare spend was going up dramatically. The government introduced a private option. So the big players today are Humana and United and Aetna and the Blues in that space. So that's definitely a pretty extended conversation. And so just going back to what they're used to experiencing in investment conversations, it's typically, if you think about the companies that have been funded and have been successful in the last 40, 50 years in that 50-mile radius in Silicon Valley, have typically been consumer products or really, really specific technologies around whether it's medical devices or chips, for example. And we haven't really seen many technologies come about or companies really disrupting complex industries, whether it's energy, healthcare, education, defense, infrastructure in terms of physical infrastructure. So the conversations is definitely not one they're used to having, because it does take, I think, a pretty deep understanding of the space to even start getting comfortable. And then the third kind of meeting, but usually I would say a typical company sort of done after one meeting. The third meeting, or many meetings after, we're describing how is technology or software really going to drive transformational change in this space. And that obviously, in our space, kind of permeates kind of everything we're doing. And that conversation typically goes well when we first go through it. Then the fourth meeting, when they forget a lot of what we talked about, they say, well, wait a second, why don't you just sell software to insurers.
And why not? I mean, that would be probably a lot easier than taking on, what is millions and sometimes billions of dollars worth of financial risk when you guys are saying, all right, we're going to be a health insurer, which is a big capital-intensive business, and doing that. And why not?
Sure. So the basic thesis in terms of the way we look at insurance or healthcare and Clover is we got into health insurance because we saw an opportunity for alignment with our customer. So if you take life insurance, for example, I view that as an industry where there's alignment, where as a life insurer, you have a vested interest in seeing your customer live as long as possible.
And the customers tend to agree with that sort of outlook as well. They would like to live as long as
they would love that.
Yeah, that's pretty easy one, I think, to sell.
And so as a health insurer in Medicare Advantage, we tend to have a pretty long customer life in terms of our customers are with us for a long time. And if you think about most of the businesses in healthcare today, the business models are pretty misaligned with the consumer. So the business I built prior was a hospital business. The hospital business model is a very broken model in the United States where it's all about consolidating market share and then leveraging that market share to get higher unit pricing from local payers. And that's why we've seen skyrocketing copays, deductibles, and coinsurances. We've seen kind of all the press around pharma drug pricing or hidden spreads with PBMs. What we saw with health insurance, especially in privatized Medicare, is the ability for us to collect premiums on a risk-adjusted basis, meaning the premiums we get from the government are tied to someone's diagnoses and their age. And so now when you think about managing care, managing outcomes, you have a direct correlation with improving someone's long-term outcomes and generating a higher margin, where you could take those dollars and pass it into the form of cost savings to consumers and to the government. So that's what got us really excited about health insurance. Then when we look at the existing players, whether it's in health insurance or insurance in general, it's a very transactional business. Health insurance, flood insurance, life insurance, you sell the policy, you're kind of done. Your job from a DNA perspective, from the CEOs and executives on down, is very much around how do we manage these policies and pay out the least amount of claims possible. They've morphed over time to become a little bit more friendly, but that's not kind of the core DNA. And so if you sit in the boardrooms or talk to folks who run some of these large health insurers, especially even on the Medicare Advantage side, they look at their profits in terms of annual EBITDA per member or annual income per member. It's not a lifetime value notion. And that changes the whole makeup of how an organization operates. So even if we sort of had the ability, which would be impossible, but if we went into a United Healthcare and took out their tens of billions of dollars of legacy architecture and infrastructure and acquisitions they've made over time and take out all their data silos that have been created over time and try to rebuild everything from scratch in a full stack way, there's still the DNA issue of the company where they haven't set up their personnel to actually drive improved outcomes and focus on clinical interactions and creating those feedback loops.
I want to back up a little bit and walk me through, let's say I'm Drew Armstrong, 68-year-old, Medicare beneficiary. I might have some high blood pressure, my cholesterol needs to be managed. Maybe I've got, diabetes at a relatively early stage. Talk to me, I'm your customer.
Yep.
What do you guys look like to me? Walk me through what my interaction is like with you all and how it's going to be maybe different from, a Humana or somebody else like that, who all say that they want to do a lot of the same things that you guys do. I mean, these are companies, that say, hey, we've got expensive patients. If we manage their care better, we will manage to both keep them around because we'll be very good businesses for them as a customer, and we'll also make money along the way. Walk me through what it's like to be, Drew Armstrong Medicare beneficiary if I'm a Clover customer.
Yeah. So it's nice to have you as a customer. So our first job is onboarding you, and the way Clover is set up is the entire organization is built around a centralized data architecture, and while it seems simple, it's a really important foundational element of the company. So if you think about an e-commerce company, so when let's say you're logging onto Amazon, for example, the reason Amazon has been able to scale mass personalization is every interaction we have with them on a daily basis or monthly basis, it's all logged, where your mouse cursor is, what's in your shopping cart, and that experience becomes iterative over time. They don't really know you day one, but day 365 or year 10, you almost feel you're literally on one massive impulsive buy site, when you're there. And that's what happens with Amazon over time. So very similar at Clover, we've built everything around this centralized view of our customer. So when you're onboarded, our goal is to capture as much information on you as we can, within reason. What medications you're on, your emergency contacts and so forth, what conditions you may have, caregivers, your physicians that you see. So all that is brought into a centralized data structure and in one ontology. So now in Medicare, typically an average patient is seeing the doctor about 5 times a year.
That's very different from,
Very different.
presumably you and me now, right? It's a much more intensive interaction with the healthcare system that your customers have versus, I go in when I need maybe some antibiotics or if I, bust my knee and I need stitches or something like that, right?
Absolutely, and it's a really, I think, great point in the sense of we think of insurance as truly a financial product. And it's been hard for, I think, the insurance industry to really take on the mindset of it being a true consumer service and that people do want services along with it. In Medicare Advantage, it's been easier to make that shift, at least for us, because our customers really use it as a daily use product. 5 times a year, they're seeing a doctor, they're on 3 prescriptions on average, going to the hospital once a year for some type of service. So our customers view health insurance as their most important purchasing decision or one of the most important purchasing decisions each year. So these frequent interactions allow data to be created in the system. Whether information gets faxed to us by a hospital when a patient's admitted, all their clinical information, or when an MRI, for example, is being asked to be approved, whether we're getting phone calls inbound around questions around the plan, when information is being logged in a physician's EHR, we're ingesting all this information. A lot of it's very messy and unstructured, everything from handwriting to free text, and we're aggregating all of that and structuring into one ontology. And the key with that is now every single person who works within Clover has access to that. So if, for example, now we're 9 months in and we know you're on a statin, for example, let's say Lipitor, and we see that you didn't get your refill for month 8.
Right, which is not good because I might end up having a heart attack if I don't stay on my meds.
And statins the interesting with statins is it's not taking a statin, for example, you don't necessarily feel bad. So you always have an issue, low adherence with a medication like that because sometimes people equate, oh, I feel great, I don't need to take my medications.
I might even feel better off my statin.
You may.
Things like that,
Yeah.
so yeah.
Yeah, or you may even, because you have side effects or whatnot. And so now that in and of itself creates alert in our system. So that alert, just that simple thing that makes sense in what we would think in kind of any other type of industry, like let's say a manufacturing plant, that does not exist amongst any of our competitors. The traditional insurer is not set up to drive workflow management with their customers. They're not able to take information and drive workflow out to their existing personnel or people out in the field. But for us, it's vital to affect outcomes. And so that alert goes to our customer experience team. So they're outreaching now, you as a customer, to find out what's going on. So let's say you pick up the phone. A conversation is had around what happened, were you away, do you need help with getting your refill? Let's say the simple response is thank you so much. And so we're now able to see if, once we get the claim again, did you actually get that refill or not?
And who do you guys have call? I mean, do you have people working at a call center? Do you have nurses? Do you have someone's doctor? I mean, who's making the phone call to me, the patient?
Yeah, so our customer experience team is filled with, we hire for 2 things on our customer experience side. It's kindness and empathy. There are a lot of people who work in customer experience in this country who have just been beaten down by lots of big corporations. So AOL is a great example where some genius there decided that their customer experience approach was going to be, we can tell via our algorithms when someone's really close to leaving America Online. And then they would basically, get to that customer and try to talk them out of disenrolling with America Online. In reality, you want to take that data as part of a feedback loop and go really far upstream to solve root cause. That's sort of like how the world should work. Well, that person got poached and got brought to Comcast. Apply the same thing. That's why we hate cable companies.
You got a knowing laugh. I think a lot of Comcast customers in the room here.
So the end result is you have individuals on the front line who a lot of customer experience folks really like talking to people. They like solving problems. They like being engaged. And they're not given the tools, and they're not given the autonomy to solve problems. So at Clover, we don't set time limits on the amount of time someone can take on the phone. Now, we try to create efficiency on that call by decreasing the amount of time people have to switch screens and look at different pieces of information. But for us, it's one, solving the problem, really engaging with that consumer. We view building customer trust as something that directly correlates with lowering churn long term, increases engagement, drives up adherence with any sort of interactions or requests we have where we benefit and the consumer benefits as Clover. So even that conversation, there's a component of asking you to do something that makes sense for you and explaining why, but really taking the time to understand what are sort of potential root causes with you as an individual as to maybe why you didn't take your medication.
I want to turn a little bit and ask you, given when you guys were started, we were seeing Obamacare roll out. A lot of health insurers decided, they looked at it and they said, all right, there's going to be billions of dollars, government subsidies flowing into this program, millions of new potential customers. There were a number of companies that were either started in-house at some of the traditional insurers. I think there's a relative one, Oscar, that was started to go after this market. People have run into a lot of problems, but you guys didn't go into that market. You chose Medicare Advantage. Talk to me about why Obamacare was not the decision you all made to pursue. I think in the last 6 months or so, that probably feels like a pretty great decision given the chaos we've seen in some of the markets there. But why not there as opposed to Medicare Advantage? That enticed a lot of people to be over on that side. Why not you guys?
Sure. So I would say just having been in healthcare for a while, it's really hard to build a long-term oriented business when you don't have stability and regulations. And you don't have a clear sense for how an industry is going to sort of evolve. You have to have a view, obviously. And Medicare Advantage, for example, started in '97. It went through a ton of chaos between '97 and 2006. For example, prior to this component called risk adjustment, insurance plans would get a fixed payment from the government for each member, no matter how healthy or how sick they were. So of course, by 2003, insurers enrolled all the healthy people. Yeah. And the government identified that as a real issue. And they almost shut down the program, but came to this grand compromise around risk adjustment. And then with the Affordable Care Act, for up until then, Medicare Advantage rates were much higher on an equivalent basis compared to regular Medicare. And so the Affordable Care Act actually brought that back in line, which actually created much more stability policy-wise.
It changed people's business models as well. I mean, it put huge pressures on people to manage care and figure out how to, treat these people like customers that they needed to manage rather than just saying, okay, we've got a nice big pot of money and let's, go ahead and deal with them, right?
Absolutely.
Yeah.
And it, as we've seen, it's created some growing pains for companies that had old models, like United, for example, that are now getting sued by the Department of Justice for kind of risk adjustment stuff. And so it took basically about 15 years for privatized Medicare to stabilize, or at least someone like me looked at it and said, there's enough stability here and the rules are logical enough where you could build something pretty special. So the exchange market, at least for Clover and the way we think about building our business, the churn is just really, really high in individual insurance. When you're selling to an age group of 50 and under, you just don't think of health insurance as that important of a product. You need it, but it's sort of bottom 5, on your purchasing decision.
People change plans, once a year. My recollection is, the government was encouraging people to shop around. You'd have one insurer, 1 year, one insurer. The next year, that would make your business relatively difficult to run if your customers are constantly changing, right?
Absolutely. So it becomes highly transactional. It's about, a 2 to 2.5 year customer life. And then there's the cost of customer acquisition. So you end up really getting focused on how to optimize claims payments and so forth. Then you also have a component where there was such vitriol in passing of the legislation. You had this whole side of the legislature, i.e. the Republicans, who were very focused on finding ways to kind of cut that industry off at the knees by holding back on certain payments that the industry, or that was obligated to the industry, that created excessive losses. You had moral hazard in terms of the penalties weren't big enough, so folks who could have enrolled to kind of lower the overall risk pool didn't enroll. You had no pricing history, and then you have chaos. And so healthcare is the Wild West in general. Like the exchange, I think, almost was anarchy for the first kind of few years. We're going to. It's inevitable that it should, as long as they don't get rid of it, it's inevitable it should stabilize over the next 5-10 years because it's insurance. At the end of the day, if you can redo your pricing each year, the math should work as long as you have enough money to figure it out. But to us, it didn't really fit our model because it's really hard to build an outcomes-focused business in a population that's really kind of 50 and under.
How would the law have to change for you guys to be in there? I have to imagine that, the way you're talking now, that you've thought, okay, maybe 5-10 years down the line, whatever this program is called, if it's Obamacare, if it's Trumpcare, if it has some new 4-letter acronym that we haven't heard yet, as we go through this process, what would that program or what would that business have to look like for you all to say, all right, this is a good place for us to be in? What does the reimbursement look like? What do the customers look like?
Yeah, so I think we're on a kind of a 10 to 20 year slow walk to fully government-funded healthcare, but privatized. And obviously that's self-interested because we're doing that right now.
In a government-funded, privatized public business, yeah.
But I actually believe that's what's going to happen. I sort of view what's happening now and has happened the last sort of 60 years. If you take some of these like really famous, athletes or celebrities who make a ton of money, they live lavish lifestyles, they get advice to try to manage their spend better, but in reality, they just run out of money, and then maybe change happens. It's sort of what we're doing with healthcare. They have all these great ideas that, in theory, none of them make mathematical sense. The commercial health insurance business is completely broken. Employers are literally like padding the wallets of health systems and pharma companies. It's obnoxious as to what's going on in healthcare. And eventually, the math's not going to work. Government is highly reactive. The government historically has never been proactive about anything. It's just the way government is. In 10, 20 years, eventually the reactive requirement's going to come to bear just because of a financial issue. And then the logical outcome is going to be, well, what is working in healthcare? They're going to say, well, in Medicare, we've got fixed rates. It's hard for hospitals to make a ton of money in it. It's hard for insurers to make a ton of money in it. We've got really great data because everything's coded. And there's total traceability in payments, traceability in terms of outcomes, and you end up going towards something fully government funded where the government is actually on the hook from age 0 to death. Like if you ever go to Canada, and Canada I don't think has the greatest system, but there's an interesting alignment where the government will actually ensure if you live on the second floor and you broke your hip, they want to make sure that you're able to get your groceries and get down the stairs. If people are seen smoking, people get upset at you because they really understand that they're on the hook for that. It's really hard to have personal accountability in healthcare today if we actually don't all feel where we're on the hook for it. It's pretty similar where you see someone littering on the street, you kind of feel that's your street as well. And that maybe you don't say anything, but it definitely kind of bothers you. And that's sort of kind of what will happen over time, and it will lower spend dramatically when we get rid of that ability for large local monopolies to dictate really high pricing with commercial insurers.
I want to ask you a bit of a broader question. You've been on the hospital side, now you're in the health insurance side. You talk to a huge amount of folks, I presume, in the investment community. What do you think the biggest either misconception or mistake about getting into the healthcare business in a deep and complicated way is either for entrepreneurs or investors. When you've had these conversations with folks, what's the biggest misconception they have about, is this going to be easy? Is this too difficult? I mean, walk me through the problems that you think are there that have frankly kept a lot of people out of this business compared to some other sectors.
Yeah. I don't dispute kind of any of their conclusions. I think it's a really complex industry that's full of stuff that's non-intuitive. I mean, when you come into healthcare, there's a lot of things that you learn that really don't make sense initially. Over time, you piece it together and you learn about how the system got to where it got to and why it got set up the way it did. But I think it's highly non-intuitive in terms of how it's set up. The regulations, whether it's on the services side or the insurance side, are numerous and massive. In Medicare Advantage, we get 140 something, quote unquote, like new letters a year. There's always these slight changes to some regulation that you have to follow. And I think there's always a risk of modifications in rules, which you hope that the space that you're in has been around long enough where those changes don't require massive business model changes. I think today, if you're getting into a really regulated industry, i.e. health insurance, you have to ensure that your business model is aligned with the government and is aligned with your consumer.
Right. I mean, you're not coming in and disrupting like the cab industry. The government tends to be pretty pissed off when you go in and screw with some senior citizens' healthcare. Like they tend to vote. And
yes.
Yeah, they do not take that lightly. Yeah. I'm sorry, I interrupted.
Yeah.
Go on. Yeah. You were, those regulatory problems, those very big hurdles, you say you get 140 of these update letters a year. I mean, are any of those tech solvable problems, or are you just having to knuckle down and deal with that stuff through, personnel and kind of brute force work?
Yeah, so it's definitely tech solvable. Mm-hmm. And I think we've done a pretty good job of getting maybe 70% of the way there in that particular area. So, for example, a typical insurer will get this PDF file and it will go to someone's desk, and that person's job is to go talk to everyone else in that department to get them to change their processes. For us, we're able to take that document, obviously with pretty basic technology, put into a text-readable format, and impute that information into the workflow. You see it to make sure it's done properly, but most of this information you can push back out into the workflow of your operating system. There's still work to be done in terms of educating any individuals who are accessing the system and make sure they understand the reason by the regulation. But a couple things happen is you're not asking people to remember things, you're educating them on the regulation, but it's going into the system as part of the workflow, so your risk of not following that rule or regulation goes down dramatically over time.
We have about a minute and a half left. I want to ask you what the endpoint looks like for you all. You have some, very big prominent investors. You guys have been doing this for a few years. You're on a very nice path. You have a, $1 billion plus valuation. What is the exit point for Clover for you all? I mean, is this something, and there's a huge amount of interest by insurers, with the attempted takeover of Humana being more in the Medicare Advantage space. I presume that you guys, at some point or another, if you haven't already, have gotten a degree of interest from some of the legacy players in the industry. Is that something you all would ever consider doing, or is the goal to remain independent for as long as you can or want to? So
I'm going to be doing this forever. One, I will never sell the company. I hate having a boss, so that's never going to happen. And I think there'll be a time that we'll go public at some point. I do think if we're able to get on this path to success, we have to be public, just all of our revenues from the government. And I think there's definitely, we never want to be viewed as being opaque with kind of our financials or anything like that at that point in time. This is definitely an industry where you can't scale overnight. You can't rapidly take a bunch of share. We're definitely running a marathon. It'll probably be a 10 to 20 year process to get there. And I think, long term, we're building, one of the most extremely valuable longitudinal data sets of genotypic and phenotypic information that I think's ever been assembled on a chronic disease population. So as the cost of therapeutics development comes down, we think, given the data we're creating, we're also building a very profitable Trojan horse for 5 to 10 years from now to start developing our own therapeutics as well.
Well, this has been really interesting. Thank you so much for the conversation, and thank you to our audience as well.
Thank you.